back. Sonia and I are taking stock of a very volatile week, and helping us are our guests Manishi Chaudhary and KR Bharat. Manishi, this week or this month rather has been all about cyclical, so some of the metal names. I was just looking at some individual stocks. Tata Steel rallied 17% this month. Do you think this particular stock can do what a Tata Motors did some time back and be the story of the year?
No, I don't think so, frankly. I think there's a fundamental difference between Tata Motors and Tata Steel. Tata Motors is enjoying an excellent demand profile in the developed economies, and including China. That is not exactly the case for Tata Motors. In fact, as we know, steel prices globally around the world are no longer decided by the developed economies, they're decided by Asia. Close to 60 to 75% consumption is in Asia, out of which more than 50% consumption in China. And China has created massive overcapacities pretty much in all grades of steel. They're operating at 60 to 65% capacity utilization, and the inefficient plants in China are typically not closed down because of employment considerations. Under these circumstances, I don't really see steel or, for that matter, any other base metal prices moving up very significantly. So in this particular case, developed market improvement or economic recovery might not really help that much. Tata Motors' story is totally different. Not only are they enjoying strong demand profile, they have also cut down heavily on costs, and therefore their margins are much healthier than they used to be before. So among these two, we clearly prefer the auto company.
Bharat, the one sector which I want to talk about is banking, and this month it's interesting. We have seen stocks like ICICI Bank, Axis Bank fall about 10 to 12%, while some of the PSU ones have actually managed to hold on. Between PSUs and private banks, how would you approach some of these names going forward?
Okay, I'm having a bit of a problem with the audio. Your voice was cracking up as you were speaking, but I think I've got the gist of your question, so let me attempt to answer. I am actually not a great sort of banking sector fan at this point in time, because my view is that in an environment where growth is slowing, banks are always going to have issues in terms of NPA. I think the level of actual NPA is far greater than the level of stated NPA, and therefore, within the banking sector, if at all I have to have exposure, I wouldn't mind paying a premium, but I would only like to have exposure to the top quality private sector banks.
Okay. Manishi, the interesting trend that we saw this week is that a lot of the gainers of the last couple of months stepped back a little bit. So if you look at names like ICICI Bank, HCL Tech, Sun Pharma, and even Tata Motors, all of them lost about 3 to 4% this week. Which are the stocks that you would actually use this dip to buy into?
I would say that, in general, there are two things that are happening in India right now. If you look at the domestic economy, trade, particularly exports, have been boosted by the decline in the currency. And secondly, consumption, particularly rural consumption, is still resilient because of the government's cash handout programs and because of the buoyant monsoons that we have seen this year. So in order to find solutions to your question, one has to search among those universes with a few small exceptions. So when you look at exporters or foreign currency earners, we talked about Tata Motors. That would definitely be a candidate. I think a confluence of exporters and rural economy or domestic consumption resilience is the two-wheelers, particularly Bajaj. I would think some of the couple of other auto companies would also fit the bill. And we also remain positive on the exporting universe, like the IT services and pharmaceutical companies, even though valuations have moved up, no doubt. But in particular for IT, I think the recent run-up that we have seen, that is purely because of the currency depreciation angle. The demand improvement angle has not yet been factored into their share price performance, and that demand improvement is happening. We are actually seeing that in the United States. One indicator that I tend to track very actively is the Philadelphia Fed survey. The Philly Fed survey for 6-monthly capex has moved up almost in a vertical line since October last year. And when you think about capex by the US companies, that can only be capex intended to improve productivity, which essentially means tech capex. So, the Taiwanese semiconductor manufacturer, the Korean chip maker, or the Indian IT service provider would be a key beneficiary of that.
Okay, since we don't have too much time left, I'm going to try and squeeze in one last question from you, Bharat. In the last 10-15 days, there have been plenty of opportunities in the mid-cap space that we've heard from our experts. And, these are stocks that have rallied quite a bit, names like SIAD, Just Dial, Persistent Systems, across sectors. If you had to identify a couple of more stocks for us to accumulate in the mid-caps, anything that catches your eye?
Sonia, I normally don't mention stocks, but since in the course of this program I've sort of mentioned an ultra tech, I would certainly go for stocks like that. What I would try and do at this stage is, like I said, try and load up on mid-cap stocks which are low on leverage and which have actually made sort of sensible acquisitions, i.e. buying out distressed assets at great prices, and increase market share in the process. So if you could sort of tick those three boxes, then those are the only mid-cap stocks I would add at this point in time, because I think, like I said, if my view is correct and the markets are going to be choppy with a negative bias over the next 9 months, that's the only kind of mid-cap stock that will give you a positive return, because the FII bias, because that's the only kind of investor we have today, the FII bias will continue to be in favor of the large caps, the highly liquid stocks.
Manishi, one final question to you then. How would you treat a stock like Cairn India, which rallied quite a bit on Friday because of the buyback news? What would be your position on that one?
We're actually positive on Cairn, but the only thing, it has run up very sharply on the back of the buyback news. And I think oil is one commodity which is characteristically different from the other commodities like the base metals, where close to about 50 to 60% of demand is still accounted for by the developed economies. So developed economy recovery could lead to some upside in oil prices, even though the oil demand supply dynamics is changing rapidly. But on balance, I would think that some of the Indian oil stocks would possibly look relatively more attractive right now.
All right, Manishi and Bharat, thanks a lot for your time, and have a good weekend. So that's our two guests, and we got some stock ideas, but at this point in time, people are saying that it will be consolidation more than anything else for the market.
And people are saying enough of market talk. Now they should go and enjoy their weekend. So from Anuj, myself and the entire team, thanks so much for watching Taking Stock. We'll see you again on Monday.